Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the market psychology of the moves today so we can better understand tomorrow. And today, we're going to be taking a look at gold. Now, gold overall, we started off the day with a pretty nice gap higher, and the gap up also came in the side of a very strong first candle of the day. This first candle of the day is no joke, right? We open up gap higher, all of the wick at the bottom, and closed on its absolute high. That means that there was buying pressure even when it turned down all the way up until the very end of the candle. As soon as the next candle opened up, that only went down one tick and then went right back up again. So lots of buying pressure on the first candle of the day allows for what we call a bar one swing. It's something that is not as likely to work because you don't really have a ton of information yet. You only have one candle to work with. But this type of environment with that amount of strength and that amount of upward momentum really shows that the buyers are going to at least give it a shot. And that's what they did. They gave it a shot, and then they found a major area of resistance. Now, if you go to a faster time frame, you'll likely find this quad top up here. Not that it's hard to find on this chart, just it looks like they put a ceiling on the market. From bar 2, 3, 4, 5, they all found the same resistance. So with that amount of resistance coming in, it's obvious that the buyers don't want to buy high. Now, at this point in time, it's not clear that the sellers are coming in. This is still a very strong move up, and arguably there's still a lot of bullish pressure in the market. The buyers are really pushing it every time it pulls down, right? We get a pullback, all wick. Strong bear into a bullish response. Not a very good one, but a bullish response. Then the buyers come in with a very strong bull engulfing candle that completely engulfs everything of the prior candle. And that shows that if the buyers are going to take it, they're going to do it right there. And what didn't happen? Well, they didn't take it, right? They didn't even go above that candle's high to trigger them in before slamming back down again to complete the 10th bar of the day. And that's a very big clue. Now we've completely shut down all of the bias to the upside, and we have a much higher probability of turning down to the lows and making this into a range, at least to start. We're looking at major support a little further down, but outside of that, we know that the sellers are dominant on this candle right here, and that allows for a sell move right back down. And you can see, not only did they sell it once, they sold it again, they sold it again, they sold it again. It was heavily, heavily defended in that area before the inevitable drop lower. Now that drop lower, all it managed to do was attempt a breakout move of the major support that we were watching at 1210.9, and then we twin reversaled right back up, right? The sell side had absolutely no follow through. The sellers couldn't even trigger in underneath that and started turning right back up. Now again, just like off of the highs, it's not incredibly evident that the buyers are taking over until a decent way into the move. Once we start getting above this breakout candle's high, because again, it's bearish breakout, you want to see them break the high of it. We didn't get that until right there. And at that point, now it's already really far up, and you're going to have to utilize a fairly large stop. Doesn't mean you can't buy it, but you are still buying with a heavy amount of risk. So there is an option to buy there, but I didn't highlight it because it uses quite a bit of risk and it's relatively discretionary. Once we start getting good follow through, right? 1, 2, 3, 4, 5, 6 back-to-back bull bars, only 2 of those not closing on their highs, but still closing pretty darn bullish. And then we have the 23rd candle as the first pullback after a very extended move like this. Not very likely that the sellers are going to be taking over, and if anything, it's just the buyers taking profit. The buyers who bought into bar 16, not believing the breakout, buying 17, buying 18, buying 19 all the way up, they need to take some money off the table somewhere, and what better place to do it than that prior swing high, near the low of day, etc., all in that same place. So it's a great place to start taking profit, and you see a little bit of a bounce. That doesn't mean that the bull trend is done, it just means that the buyers are getting out of a little bit of their position. So arguably, if you are a little more aggressive, you could be buying on the bottom of bar 23, right? Very strong bear move against, well, not very strong, it's a fairly weak bear move against a very strong bullish upswing off of the base of at this point in time, we have to believe it's a range now. So where are we going? Well, if we're buying a low of a range, we're probably going to go back to the high of a range. And if we broke out of the range with a wedge bottom, we're probably going to break out of the top of the wedge with a wedge top, break out of the top of the range with a wedge top. So a nice opportunity to buy aggressively there, or even if you were late to the party or didn't want to buy right there, buying on even the high of the 24th candle of the day still allowed for continuation up for a 1-to-1 target. So just a phenomenal example of sometimes even being late to the party, you can still get those targets. Now, I would rather be kind of somewhere in the middle, not too early, not too late, but hey, it still worked nonetheless. And then we get some nice little choppy back and forth action here. They popped their head just above last week's high, tried to push down, sellers likely trapped underneath the 33rd bar of the day, trying to get the move going lower. And if they weren't trapped there, they were very likely trapped after the 36th bar, right? We have the sellers turn down once, the buyers try coming in again, and they turn down again to try to get them going. If they're not paying attention to the fact that we still have a very bullish trend on our hands and we can't even break through the moving average, let alone even touch the moving average, not a great place to be selling. But if they are trying to fade the top of a range, that's going to be where they get in. Now, what does that mean? Well, it means that there's going to be a bunch of stops above the highs and above the highs. So that's where the market is likely going to start going. And since we saw a wedge bottom at the earlier move lower, we're anticipating a wedge top at the highs. So there's no reason to be a seller yet because we haven't gotten the wedge top. Now, once we finally do, now we're starting to go back and forth and pull back again. And this would be an area where you may find some selling pressure. Of course, we're going into President Trump speaking here in about an hour, so we may just go nowhere, but you get the idea. Now, before we made that new high, we started pulling back, and the reason why there's a buy here is simply because there's a bunch of trapped bears. The sellers are selling too early, and it's a really good way to push up, get their stops hit, and then look to start selling. So a great kind of counterplay against the sellers coming in against a strong bullish move. So that's going to do it for this one. Great day of trading overall, and a really good example of market psychology in combination with technical analysis, especially technical analysis today on gold. So again, that's going to do it. If you have any questions about it, you can always send me an email, jbrink@slingshotfutures.com. Hopefully you found it useful, hopefully you found it interesting, and we'll see you tomorrow.